Well, good to see everybody. It's the market roundup time. Joey here from Maverick. It's the 2nd of June. We are into a new month, getting into the summer. Not sure what you guys have got planned, but we just came out of a pretty decent holiday weekend, which had optimism going into it, and I do believe that that is actually carrying forward, especially after today's action. Folks, this is my opinion. I'm going to give you my 2 cents. Take it for what you will. Take responsibility for it. Let's get into a market analysis. So what I'm talking about, folks, is a little bit of a hesitation coming out of Monday's holiday and Tuesday and Wednesday. I really believe that these markets could have just given up the ghost and maybe just faltered and fell apart after Wednesday, but it did seem to hang in there. And today's action was a lot more optimistic. Whether it's an oversold bounce, folks, or continuation of a move to the upside, it's still pretty cool because I'd like to see a retest of resistance for a really solid test before we roll over and I could get completely bearish. Now, that's if you're glass half empty, if you're a bear. On the bull side, well, it's pretty obvious. You need to sustain above a certain level. You need to set a higher pivot low and maybe test that 50-day moving average and move to the upside. So we're at this really good push and pull point. Kind of expected, seeing the resilience in the market and some of these buyers, whether it's an oversold bounce or it's some bottom fishing or something in between. It's pretty clear on where we're at, which is in the middle of a situation where we go either way. So the Dow up 1.33%, the S&P up just shy of 2%, Nasdaq 2.75%, just shy of that. The Russell's 2.5%, so on and so forth. You guys can see these numbers here. Oil up 1.77%, gold, so on and so forth. So it's a pretty good move to the upside. What I think it was is a little bit of a shell shock. We come out of the holiday weekend. It goes to Tuesday. What do? Not sure. We doji. Then we have this candle that's a little bit more ominous. Yeah, but we did get a pretty good surge to the upside. So we're holding the last week's gains at this point. And we're right at a pretty good level when it comes between the 20-day moving average and the 50-day moving average. We could continue to see upward movement. I wouldn't be surprised if we did. There's really nothing in the way that's going to keep us from doing that. Whether you're bearish or bullish, think about that, guys. We know that this could be a bear rally, and it's treated as such. But there is bottom fishing. There are signs of good out there. It just depends on how brave you are to put the money to work right now. Taking a look at the SPY, we're at the 420 mark. We're pushing up to the 420 mark, closing on the highs, by the way, folks. Take a look at this candlestick. We actually closed on the highs. So a push to 420 up to the 50-day moving average, as we discussed on Sunday's trading room. It's totally in line with it. It looks like it's 80% going to happen. I could be wrong based on any sort of unforeseen event, but a test of the 420, even the 50-day moving average, would be a really good bear rally, right, if you guys are pessimistic, or a strong move to the upside before consolidation or even setting a higher low. Now, that's going to take another week or so before we can see that. But for now, it's a pretty sustainable, nice move to the upside. So the Qs also participating, definitely looking more ominous, but a nice bullish engulfing candle. I like that. So Tuesday, Wednesday, are we going to make it? The volume stayed light, and today, a good surge to the upside. Whether that continues or not, we'll see. But 320 is the resistance level, the 50-day moving average. We do have some room for these markets to continue to move higher if they see fit. What does that mean? Well, folks, if you got into some bull trades at the end of last week, hold on to them because you might be able to squeeze a little bit out over the next day or so. It's been really nice so far. Take a look at this heat map. Everything's participated. There are some headliners, obviously. There's going to be earnings and stuff like that and some news events, so on and so forth. But overall, it's just a general move to the upside as we would expect. Now, my market outlook, folks, it hasn't really changed. I'm going to give it a 0, and the reason being is because we're above the 20. We're still below that 50-day moving average, and the slopes, I'm going to say kind of flat. The 50's down, definitely. The 20 looks like it could be trying to flatten. But I want to stay a little bit cautious. But I have reduced my monthly outlook substantially. I was debating on going to -2, but I don't think the rally up is done yet. Now, if we go up and touch that 50-day moving average, -1 is exactly what I'm thinking. If we roll over tomorrow, then maybe a -1.5 would have been a little bit more realistic. I am still pessimistic overall. You guys understand that's still a negative monthly outlook. It's not -3, it's not -2, and I think a lot of it has to do with the bounce that we're seeing over the last week or so. So, however, it is still downtrending. It's still setting lower lows and lower highs. So I have to stick to my guns. Now, the tough part, folks, and I hate doing this sometimes on Thursdays because there's just nothing out there. When we get a market that continues to correct, it destroys all bulls, it destroys all bears. There are some potential trades here in the neutral side that have been holding fast. Let's take a look at the USO on the upside first because this has been a beautiful ascending triangle. It's been nice for anybody that's been lower to the target, meaning not too aggressive when it comes to, oh, I think it's going to hit 90, 95. It's been pretty decent when it comes to sideways to up. Calendar trades, butterfly trades, diagonal trades, so on and so forth. And it still looks like it's holding in there. This is one thing, folks, and not only just this stock here, but the whole sector in general that's keeping me pessimistic because the flight to safety is still there. It's still there. I'm not seeing an abandonment of safety stocks yet. The volatility index is dropping pretty substantial. It's not really spiking or anything, but I don't see this huge, oh, you know what, I'm going to dump all my energy, all my industrials, all my safe stocks, and rush immediately back into tech. I haven't seen that yet, and this chart's proof of that. So until that happens, I'm going to stay cautious as well. Unfortunately, that's all I got on the bull side for now because the markets are bouncing, but there are some cool sideways stuff. TLT, this is going to be gauged directly to interest rates and the problems, or not the problems, but the what we're seeing when it comes to the Fed increasing rates. They're going to stay on track. I've got a summary slide that I'm going to talk about here in a minute, but it seems to be establishing a range between the 120 and 115. It's a wide range. There's going to be higher probability when it comes to staying between the 120 and 115. Lower reward, higher risk, so on and so forth for you guys that want to condor this. But it's been pretty steady when it comes to sideways ever since mid-May. It bounced off that 115 mark, and it's stayed in between ever since. So if you guys want to throw a couple bucks at the sideways trade, that's a good one. This is coin. This is something that I had on my bear for a while, but it looks like after that gap down, second week of May, third week of May there, it's trying to find some sort of area to park between 60 and 80. And folks, yes, that's a $20 range. So be careful with this one if you don't like the volatility. But if you want to do something wide, this might be something to play, week to week, so on and so forth. So tomorrow's outlook, we should expect to see some volatility. And where I'm getting that from is yesterday's candle versus today's. Big move down. It did climb all the way back up to close, not quite positive, but it retraced the majority of its losses. And then today, a huge move to the upside. So it got a big push and pull Wednesday to Thursday. So volatility is there, but we'd expect that when it comes to some sort of a bounce or retracement, short cover rally, whatever you guys want to call it, right? Doesn't matter if you're bearish or bullish. I love following the price action because it's never wrong. So we're just below the major support levels. I do believe that price will actually climb there or test it, whether it's intraday or not, or we blow through it. I know it will be revisited, whether that's Friday, maybe we get a little bit of a hiccup tomorrow, and then come Monday, Tuesday, we test it. We will test those levels at some point. Keep that in mind for you bears that are going to be too itchy on the trigger. Take your time, wait for it to roll over, and confirm before you jump into more bearish trades. Inflation remains at the top of the list. I'm seeing articles, is the Fed too slow? Are they behind the eight ball? Are they too aggressive, etc.? There's always people blaming the Fed. Do they need to increase rates at a higher pace, or do they need to slow the buyback? I mean, there's all sorts of different things going on. If the focus is there, it's definitely on everybody's mind. Whether or not they're right doesn't matter. Follow the price action. We do have non-farm payrolls and an unemployment rate tomorrow. We'll see if that's going to have an impact. We are in a very sensitive area when it comes to inflation and some of the reactions that I've seen, even going into the holiday and of late. Lots of reactions when it comes to, oh, geez, this jobs number is too high or too low. We've seen it a little bit, so keep that in mind. But don't jump into it, folks. Follow the price action. Price is going to confirm higher or lower. Let's deal with that first. So Lululemon's one that I just pulled from earnings reports. There are earnings coming out. This is one that I thought was pretty decent. I haven't seen what it's done so far, but we do have some next week. I think there's not too many coming out tomorrow, but take it for what you will, folks. Always follow along with what you're trading, and it's always best to double check whatever you're trading to make sure it doesn't have some sort of an announcement. But that's all I got for you. So a pretty standard day. A little bit of a reaction to yesterday's down move. I'm going to call it a follow through to the bullish momentum that we saw going into the holiday. So we'll see what Friday gives us. All right, guys, thank you for joining me. We'll talk to you next time. Bye, everyone.